Hey guys, it's Will. I wanted to follow up on my last video, which is talking about the downtrend in the sector's inverse ETFs. I had a couple of comments. One was on VIXY. Somebody said they liked, there's this thing in TC2000 called VIX-X, the market volatility index. So that is what they prefer. So you could put that in your markets watch list if you want. But VIXY is something you can buy like on the in the brokerage firms. So you could use this. You could put that in there. You can see that it's up 9.4%. So what I think why I use this one is also because you can buy it, but also it's not as it doesn't go up as much as this one. And so that, these are short-term futures, but they're up 3%, whereas the VIX. So if you're, you want something a little bit more reasonable, in my case, in terms of what I might purchase, on the stock market. But I mentioned yesterday or on Friday that we're in this downtrend. Obviously, the question is after a while is when do you sell? When do you get out? When's a bounce going to happen? There's different ways to look at that. But right now, we have this downtrend and we have red volatility stops here. We're below the 8 EMA, which is, they call the T line. We're in this downtrend momentum-wise, so there's no real change here. When you start to see gaps and it's starting to go, this one's not as bad, but you start to see, if I draw a trend line, say across here, you're starting to pull away from it and you're going more vertical or parabolic. So that's when you can consider, selling. The other thing was on Friday, see this little wick here. I'm going to go to an hourly chart. The last couple hours here, you saw this reversal on Friday, but right now it's not, in the pre-market, it's not following through with that. But if you want to get TC2000, check out the link in the description below. You can get a free trial or $25 off your purchase. With TC2000 now, I can see the pre-market as of 7:37 a.m. So, you don't know what's going to happen when the market opens or what happens during the day. Right now, we've got a lot of volatility. But technically speaking, if you're in a downtrend and if you're in a short ETF, which I'll show in a second, there's no reason to get out in that sense. But if you've got some good gains, you could sell. If you got in up here or somewhere, you could sell a part of your position. You don't have to sell the whole thing. But the other thing before I get into the market, somebody mentioned was LabD. So that's an inverse of the biotech. So if you look at let's say IBB, you can see this downtrend, and it's getting further away from the 8 EMA, down in this oversold area. XBI is another one that's still in a downtrend. So the opposite, but the only problem is these LabDs are 3x, and right now it's up 2%. It looks nice in terms of this is like when you over here where you have these vertical gap ups. It's a bit trickier in that sense. See how you had a nice kind of rise up here, and then you started to go big, huge candles vertical with a gap right here, and that's starting to show you that you might want to get out. You're also up pretty high on the price percent oscillator. So if you were looking back, what you should do is look and see where you might want it to get in. You start to see it curling back up again. You're still above the MACD or the price percent oscillator, but you do have the 200. It's still 28% from there. But I'm going to zoom in here. A great place to try to get in is after a pullback. It doesn't always work, but see how it pulled back here and it boosted. Now here you had a 50 right close, but so it bounced off the 50. So that's not a great spot in my opinion when you're very close to the 50. But then after this pullback and you start to see green volatility stops getting up above the 8 EMA, you want to see what happens at the 50. So you could wait till it got up above the 50 here. So sometimes I'll put an arrow. So on TC2000, there's this arrow palette and stuff like that. I'll put a thing here, maybe at the 50. You could get in sooner. But if you look here, you never cross down below the moving average of the price percent oscillator. But this is a 3x, so obviously it's going to go up and down a lot more than the underlying, biotech ETF. But so that's the couple of comments that I got. So all the markets right now are in a similar situation, downtrend, fairly low on the price percent oscillator. You can see here we're at the spot where last time in June it sort of reversed. If you're in, you can still hold it with the red volatility stops and wait till you see a green one or a cross of the price percent oscillator. Another thing, depending on your timeline, you can look at the weekly charts. You did have a cross and it is heading down, so there's no real reversal at that point. That would be a bit slower to reverse, but so all the markets are the same, as I said, SPY. There are some recent lows. June low for S&P 500. We're right about that spot. There was a bit of a bounce on that, so we'll see if it sustains itself. When you get near support, either a moving average or some sort of previous support or resistance, you want to make sure you don't necessarily want to buy right at that spot, because that's where the reversal is going to happen. IWM is fairly bad in terms of its downtrend, is more than the other ones, but it's going fairly vertical, parabolic at this point. So from that, I would look at inverse ETFs at this point. Some of these are from Friday. They're Canadian. They don't change right now in the pre-market. Just the US does, but I mentioned these before. ARK Innovation. One thing I do a lot is I look back to see where I should have got in if I didn't. And like I said, one of my favorite basic technique is in an uptrend with higher lows here, and then after a pullback, so you put an arrow kind of thing, telling yourself that's where you want to get in. Now you can wait if you wait a bit longer till the PPO is crossing over MACD, you can move it a bit further away. Rising stochastics. Relative strength to the NASDAQ, you can see it rising here as well. Obviously, it's the inverse of a tech, a tech ETF like NASDAQ. But the ones like UUP, you see this big wick here, so it's going kind of parabolic, and that's when you're due for a reversal there. Up pretty high on the MACD and price percent oscillator as well. But you're still above the V-stop and everything, but it's just getting parabolic. So there's some NASDAQ. PSQ is the NASDAQ inverse. DOG is the Dow Jones. These look decent in terms of their charts. SH is the S&P 500. See, if you look at this previous high, you're getting close, depending on if you use the candle, top of the candle here, or the wicks way at the top here. So it's not a great spot to enter, because you're so far above this recent low point and very close to a potential resistance. And then of course you've got the UUP, which is the dollar I just talked about. TBF is the 20-year Treasury inverse. Someone else, they mentioned LabD, so I'm going to go to the leverage ETFs. You have a whole bunch here for oil and gas, for high beta, bear, dust, which is the gold miner. So like I said, it kind of gapped up here and it's going fairly steep here, but like this is a nice slope. These ones gap and go kind of parabolic here, and maybe not going to last too long, but I am expecting a reversal at some point of the market. So like even just a short little reversal rally. And, you want to definitely get in earlier. If you're in, you can hold, but once you start to see that reversal, it's probably a good time to get out. But yeah, you got financial FAZZ. Real estate DRV, but like you have so many days of up candles. And these are 3Xers, so you're going to have, like, if you wanted to put a stop at the volatility stop, which is, you know, you're at a fairly decent percent, 6%, 7%. And that's like, ideally your stop should be at these low points here. So if you get in there, you know, you're way up here. You could just ride that out until it changes to a red volatility stop. But, or like, so when you see this going up like this, see this red is the next one you could sell. If you waited till the end of the day, it'd be down here. It's an early exit in that sense, where the slope is still going up on the MACD and everything, and it's still above the 80 MA, but that could be, you know, an entry point, an exit point right there. Yeah, so there's a lot of 2 and 3X. If you look at direction, so this is, if you look here, direction, DIREXION daily. There's also in Canada Horizon ETF, Horizons. Obviously, there's some pro shares as well. Lots of direction ones are available. If I type in, you can type in pro shares like this, and this pops up, and then you see ultra short Dow, ultra short QQQ, ultra short 7 to 10 year treasury. So you got a whole ton here from pro shares, ultra short healthcare. Another way to go is to type in inverse, and you'll see a whole bunch of natural gas inversion, stuff like that. You could type in bear. You'll see direction here, daily emerging markets bear, S&P bear, energy bear, tech bear, 3X, financial bear, that's what FAZ I told you about. And then there's a Horizons one, S&P. So obviously be careful with the inverse ETFs, but even though they rebalance every day and there's some sort of degradation in the ETFs, you have this, at the end of the day, when you buy and sell at different prices, you know, you get the profit from that. You know, if you draw a trend line, like if I go back to the, see this trend line right here, you'd have to break that on an uptrend and have a higher low like this. So a lot of times you get this little green volatility stop here, you get a little bit of a pullback, you know, a rally here, but it doesn't sustain. And you want to see this building higher lows here. And then that's when you get, and then you're above the 50, and then you pull back, usually over, you cross the 50, pull back, that's another entry point right there. Because, you know, you've proven that you can support at the 50. But if you break down below the 50, you come back, test it, you know, got a little bit above the 50. But once you see this breakdown, that would have been a good spot there, because, you know, you basically failed at the 50. So those are the entry points. If I draw an arrow and I sort of drag it down, I can sort of have a down arrow as well. But that's when you want to short. So right now you're a little bit long from this original entry point. If you get a rally up to the trend line, or even up to 50 or some other moving average, and then you start to see it break down, that could be another shorting opportunity. But anyway, that's enough for today. If you want to get TC2000, don't forget, you can get a free trial or $25 off your subscription in the description below. And thanks to everyone who's picked it up. I hope you're enjoying it, and we'll talk to you in the next video.